I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. You can click the link up here or in the description box below. I have a giveaway coming up at the end of this episode, and you're also in for a special treat. I have a new feature in the show for the month of August that's coming up right before your market recap. So come on, let's get this money.
First up, Jamaica's Supreme Court has ruled that the constitutional rights of a student from Kensington Primary were not breached when the school refused to accept her because of her dreadlocks. It's opened up a wider conversation about what is culturally appropriate for the workplace as well. SSL Group CEO Zachary implemented a cultural inclusivity policy accepting all types of hairstyles in the workplace, including Locs. We'll delve into this discussion on whether workplace grooming policies are too strict with culture and talent management consultant at JMMB Diana Morgan-Burgess and CEO of Supreme Venture Services Dennis Chung. And later, the analysts weigh in on the latest market developments. NCB Financial Group is reporting net profit of $20 billion for the 9 months ending June 30. And First Rock Capital Holdings has announced a $1.2 million in net profit ending June 30. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Stricter COVID-19 measures are being announced as the government moves to control another spike in new cases. Cabinet was forced into a meeting on Independence Day Thursday, with the Prime Minister interrupting celebrations to warn of additional measures to come for churches, funerals, the entertainment sector, beaches and rivers. Jamaica has been experiencing record single-day spikes, with high-risk communities in Clarendon and St. Thomas also placed under 14 days quarantine starting last week. Additional deaths and hospitalizations have also been recorded. The uptick in cases is cause for concern as the administration tries to keep the economy open, with the island already technically in recession amidst a second wave and a pending general election also in the mix. Businesses in Jamaica have recorded their lowest ever perception of present business conditions in the country. According to the latest Bank of Jamaica BOJ survey of businesses' inflation expectations for May 2020, the present business conditions index dropped some 70 points when compared to the March 2020 survey. The survey represents the lowest on record and can be linked to the impact of COVID-19 on current activities. A more favorable outcome was noted for the Future Business Conditions Index, which increased by 33 points, reflecting an increase in the proportion of respondents who expect a rebound in economic activity. The Supreme Court has given iCreate the go-ahead to host a hybrid annual general meeting AGM, contrary to its articles of incorporation. On July 23, iCreate's claim, filed in June, was approved by the court via Zoom. The court order allows iCreate to host its meeting at a physical venue with 10 individuals, inclusive of shareholders and directors. The meeting must also be held electronically to allow those unable to attend to see and hear the proceedings, ask questions, and to vote virtually before the meeting or by proxy. Scotiabank will expand its network of new deposit-taking ATMs that it calls Intelligent Deposit Machines (IDMs). Executive Vice President of Retail Banking Audrey Tugwell-Henry says work is ongoing to increase the number of smart machines across the island to near 80 by the end of 2020, improving on the 57 already installed. The newly commissioned smart banking machines offer a variety of enhanced features such as immediate credit on cash deposits and cash denomination options. Tugwell-Henry says the expansion of the bank's IDM network is timely, especially as they have been effective in helping the company manage in-branch traffic during the ongoing health crisis. The new IDMs bring the total number of automated banking machines provided by Scotiabank across the island to 274. JMMB announced that it will implement additional fees effective August 17. The announcement follows that of an increase in fees and new charges just 2 months ago. The biggest change now relates to transfers between own accounts conducted in branch. The previously free service will start incurring a $1,000 charge in under a week. In-branch withdrawals from savings accounts will also jump by over $100 to $200 for amounts greater than $100,000. However, the fee is not applicable to persons over the age of 60 years. In total, 16 services will incur additional fees. Services at the bank's ATMs remain largely free of cost. Google plans to launch a new $350 phone called the Pixel 4a to compete with Apple's new budget iPhone SE launched in April and Samsung's Galaxy A51. Google's new phone represents the latest entry for tech giant into launching cheaper devices as a means to combat falling high-end smartphone sales by encouraging cheaper upgrades. Google's new phone is a low-cost alternative to its current flagship Pixel phone and comes with some of the Pixel 4's standout features, like the ability to capture photos of the night sky. The new model, which launches on August 20, comes with a 12.2 megapixel camera capable of supporting features like portrait mode and night sight.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. When we come back, two business leaders talk corporate culture and grooming. Are some of our standards outdated? This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. In 2020, are workplace guidelines on how one dresses too strict? Should people feel free to wear their hair how they want to, including locks? To discuss, we now have culture and talent management consultant at JMMB, Diana Morgan-Burgess, and CEO of Supreme Venture Services, Dennis Chung. Thanks for joining me, Diana and Dennis. How are you both doing?
Good.
Yeah, I'm good.
Dennis, I see you all over the papers after your big venture. Fortunately, we had the scoop, right?
Yes. You're the one who launched it.
Supreme Ventures Business Hub doing big things. Yeah. But let's talk about corporate culture, especially as it relates to grooming. You are both familiar with that Supreme Court ruling regarding the young girl who was denied entry to Kensington Primary School because of her dreadlocks. And that has opened up a wider discussion about grooming in the workplace and corporate culture. I say Zachary from SSL Group has put a statement out there saying that they have workplace inclusivity, and perhaps it is time for us to re-examine some of the things that are allowed and not allowed and the culture in the workplace. So let's start with you, Diana. What's the corporate culture like at JMMB as it relates to grooming?
Thank you very much. Corporate culture at JMMB is, we focus on ensuring that we create and maintain a relaxed environment. So we're not talking about casual, we're saying relaxed environment where team members are comfortable to be at work. We are trendy, and yet we are conscious about being business-like and ready to serve our clients. And it's important when you're serving that you're focusing on the needs of internal as well as external clients. So that's pretty much where we are.
I see you wear your natural hair, Diana. I understand that you used to wear locks as well. Was there ever a time when you felt discriminated against in the workplace or were explicitly told that you couldn't wear your hair like that?
No, I never had that experience. I used to wear locks. I was locksing for 20 plus years of my life, and most of that time, all that time I was locksing. I was employed to JMMB. Currently, I am consulting with JMMB, but I didn't really break my tenure. I broke it for one, and then I'm consulting since then. I always wear locks, and I never experienced any discrimination or anything like that. For me, what I have, I'm always conscious of how I wear my hair and conscious of the message I'm trying to send and my audience. So those are the things that I would say, those are places that I've made sure all the time that I'm conscious of who I'm working with, what I'm doing, and the message I'm sending.
Dennis, what's the culture there at Supreme Ventures? What's the policy?
Well, we have a non-discriminatory policy, so we don't discriminate. for religion, sexual orientation, everything. So it's actually stated. So we don't discriminate at all. We are a very relaxed environment. You see me with my t-shirt, a Supreme Ventures t-shirt, which is how we dress most of the days. Because we don't, in our back office, we don't really interact with people externally. So we're very relaxed here. And I also am wearing my natural hair. Not much of it.
Well for you.
Thanks for clarifying that.
But we are non-discriminatory. I mean, people must be free to express themselves. I couldn't believe that it was an issue that was being discussed in this day and age, in 2020, when we had other things to discuss, that we're talking about, someone wearing Locs or whatever to work. What's important, as Dana just said, is that people are well groomed. You obviously don't want people coming to work and they're not looking good or not well groomed. And I think that is the important thing. So whether you have Locs or whatever you call them, as long as you're well groomed, that's important.
Whatever style you have, you're going to need to take care of it in a particular kind of way. You have to be deliberate about your hairstyle, about how you groom yourself. If you have natural hair, if you have processed hair, if you have Caucasian hair, whatever kind of hair you have, it's very important that you are conscious of your image and take care consistent with that.
I'm pleased that both of you have inclusive corporate cultures there at JMMB and Supreme Ventures. It's unfortunately that Zach couldn't join us because he's the one who sent out the press release opening up this conversation following the ruling. But Diana, I'm a little bit surprised, or maybe it's because you've been at one place for 20 years, but over the past several decades, this has been a problem. I'm sure you've heard of other people at other workplaces who have been discriminated against because of something as simple as their hair, told that, you can't meet and talk to clients like that, with even hair that you're wearing yours right now.
Okay, so let me explain something. I want to say that, as I said earlier, being conscious of who you're speaking with and message you're sending. So I have done work in Jamaica and across the Caribbean. I have been invited to Poland to speak to HR community, and I'm doing all of those things with my Locs, right? The thing is, there are persons, because of who they are and because of their natural styles and what they're comfortable with, that may be more or less comfortable with natural hair or dreadlocks. But I think everyone, it is very important that whatever your hairstyle, however you're managing your creativity or your unique expression of who you are, that you are conscious of your audience. So if I am going to hang out with a group of young people, it's easier for me to just let my hair out and just let it just go. If I'm going to be having a conversation with a more mature audience, then of course I am going to be conscious, not like they're asking me to, but I'm going to be conscious, understanding that those persons, because of their background or how they have been socialized, it might not be as easy for them to appreciate that my hairstyle does not equal how smart I am. And
so are you going to change for them? Are you going to change your hairstyle and try comb it back or something when you're meeting that type of client?
I am conscious of my audience. So there are situations where I am okay letting my hair out, and then there are situations where I feel like it's better for me to put my hair up and out of my face so that it's not taken away from the message that I am trying to send. I am very conscious, and that is what I would recommend, to be conscious of the audience, whatever hairstyle you have. I used to work for American Airlines, and no matter how kind of hair you have, they say when you're talking to the passengers, it's important to style your hair such that it's away from your face, just because you are so much in other person's faces and you want to be conscious of your audience. So that's what I would say.
So your thing is you just don't want it to be a distraction. So Dennis, is there a line anywhere though? Because based on the Supreme Court ruling in schools, one starts to wonder, well, if one thing is allowed, and one of the grounds that was argued that was actually rejected by the court was freedom of expression. And so the attorneys felt that, and others too since then who've encouraged the family to appeal, feel that one should be entitled to freedom of expression, and freedom of expression includes how one wears one's hair, how one dresses oneself. If that is constitutionally guaranteed though, can't we just show up to work any which way we feel like?
No, there has to be some standard in terms of grooming. I think that's going to be very important, and therefore, it might be a little difficult to set that, right? And I know companies, including here, have grappled with it because you want people to be relaxed, but there are certain things, so you don't want them to be dressed in such a way so that it's showing skin, for example. So it's provocative. So there are certain.
You mean like sleeveless? We know about that sleeveless rule. Our arms are so sexy, it shouldn't be allowed.
So I mean, not sleeveless. I mean, I think that one was difficult. When they spoke about that in terms of competencies. But certainly, I mean, people, for example, wearing jeans that are torn up, which obviously is a fashion. There are certain things you don't want. I believe in a relaxed culture. Me, Khalida, I believe in ties. I'm so happy that the corporate world has moved away from that. But there must be a certain level of grooming, and it's not just comes down to your hair or how you dress, but also, you have to maintain your hygiene. That's some of the things that are important.
I know, as you mentioned, skin, Dennis, I know one corporate company, a large company, a friend of mine who used to work there up until very recently is telling me about their policy on shoes for women, that if the front of the shoe is open, then the back can't be open. And if the back is open, then the front can't be. You can't show toe if you're showing heel, and you can't show heel if you're wearing toe. Is this majoring in the minor, Diana? Are rules like that really necessary?
I would say it's important that we are conscious of, one, how the world is evolving. And this is why at JMMB we are constantly looking at the policy. There was a time when we had, in our policy, we said that, and this is a long time ago, capri, for example, was not allowed as part of dress code. And then as the time evolved, realize that capri can actually be businesslike and well tailored and be appropriate for work. At the same time, we still have to put some parameters. So I understand any organization try to put parameters. Parameters important because, as Denny said, if we say just let it all hang, you just come with however you feel to express yourself today, we may not be, I would say that is not consistent with serving international, serving external, serving clients of different age group and those kinds of stuff. It's important to be conscious of that. If you're going to speak to an elderly client who returning resident, for example, who left here when the order was different, they're going to be thrown off if when they come to speak to you, all of your creativity and your pink hair and all those things, you just let it hang without any consideration for the persons who you are serving. So I can't say specifically about whether the shoes is, it is appropriate or not. I'm only saying, can we just consider, one, being flexible and ensuring that we are checking all the time to see what has changed and how we can change with it, and also how we are working and having our dress code consistent with the who we're serving and with as time is evolving.
One of the things too, when it comes to dress code, the people who are usually policed most happen to be women. We're the ones who they look at our hair, at our dress, if we're showing too much skin, what type of shoes we wear. Dennis, there was a young woman I interviewed recently for this program, by the way, when we're still doing face-to-face interviews. At the end of the interview, we're taking a photograph, and she said, "Oh, please don't get my shoes because I'm wearing flats, and our policy is that you must wear heels." I said, "You must wear heels? Does that policy apply to men too?" Like, there are discriminatory policies on the basis of culture, on the basis of gender. How do we go about even recognizing that these are biases, Dennis, and pointing them out and changing them?
Well, I think you're right. I mean, people do tend to look at women more, and it traditionally has been so, maybe because women are better looking than men, That's why. What I can say, Kalila, is that I have never worn heels, so I've been breaking that policy. But you're right. But I think it's changing. I think it's changing. Change comes around when you get more enlightened management. And if you look at what has been happening over the years, the younger persons coming in, persons are becoming a lot more enlightened. And therefore you can look at companies that have these enlightened managers and see the impact. Things are changing. The truth is that a lot of people nowadays are not looking at women any differently from men. That's a traditional thing, but we're seeing where women and men are a lot more equal now in terms of how people are seen.
Diana, do you think it's time for all corporate companies now, all businesses, to use this ruling as a moment to reevaluate their culture at their offices?
It could be. It's important, again, to ensure that we are keeping pace with how the world is evolving, and the mentality and the experience and how people are entering the workspace, and what makes people both internally and externally comfortable, and what is workable. Workability is key, because when you're crafting the policy, it's important to consider, especially now things have changed. A lot of people working from home. You have a lot of support services that they are behind the scene. They are not necessarily serving out front. So it's important to look at the policy to ensure that we're capturing all of what is required to operate an organization right now, and it is important, especially given that you have younger persons who are seeing all the trends out there and they want to follow, and you also need to take into consideration the personalities of the persons who are setting the policies, because I can tell you for sure that if someone who have a more outgoing personality is responsible for crafting the policy, it is going to be less rigid than someone who has that, personality that says this is how things are to go and it needs to be more in order. And so it's important to consider who you're serving when you're crafting policy.
Thanks for joining me, Diana, Dennis. Good discussion. Now, up next, it's the first part of our special feature for August, your light bill and you. After that, I've got your market recap and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Hey guys, so I need to take this little break to tell you some things about your light bill. A few weeks ago, I did a Money Mondays JA episode about understanding your light bill, and I got a lot of comments and some more questions about it. So since August is one of the hottest months, and we're probably going to be using more electricity, I want to use this time to give you a light bulb moment. You see what I did there? But first, I want you to run go get your last light bill or bring it up on your email. You can pause this video in the meantime. Okay, now that you're back, look where it says FE adjust on your light bill. It stands for foreign exchange adjustment. You'll notice that this is a percentage that changes every month. On this bill, it's 5.623%, and I'm going to show you exactly how they calculate this percentage. The foreign exchange adjustment is the difference between what's called a base exchange rate and a billing exchange rate. Now let's talk about these two things. The Office of Utilities Regulation, OUR, sets the base exchange rate every 4 years. The current rate is 128 to 1 US. This number is currently under review as there's a rate review meeting this year. So expect a huge jump because you know where we are now. As of Friday, we're at more than 149 to 1 US. Now, the billing exchange rate is the current market exchange rate at the time of billing. This number changes from month to month, so this is where they make up for the difference, since the rate 4 years ago is unlikely to be the same rate today. Time now for a little math class, but don't worry, Teacher K won't make it too hard. Here's how we calculate the foreign exchange adjustment percentage. We start with a simple subtraction. First, subtract the base exchange rate, which I told you was 128. We know that's what it's set at. And now let's say the billing exchange rate for this month is 137.60. I know it's a lot more than that right now, but for argument's sake, let's just use this number. So the difference is $9.60. There you go. Next, we divide that $9.60 by the base exchange rate. Finally, we multiply this by 100 to get the percentage, and that's going to give us 7.5%. This is the foreign exchange adjustment as a percentage, and you can find a similar number on each month's light bill. So if you look on your bill right now, you'll see this 7.5% on your August bill that was just due. This means that you have to pay an extra 7.5% of the subtotal to compensate for where the dollar is today. Now, if the foreign exchange percentage is a positive number, like it is this month, that means that the billing exchange rate for that month is higher than the base exchange rate. But because our currency technically moves two ways now, there may be times when the billing exchange rate is actually lower than the base exchange rate. Don't know if that's ever actually happened, but it is possible. If and when that happens and you run the calculation, you're going to end up with a negative number as the foreign exchange adjustment. So you'll have a negative FE adjust percentage. So let's say the base exchange rate is currently 128, which it is now. If the billing exchange rate for the month is 125, then using the same calculations that we did earlier, we're going to end up with a negative percentage. This means that the customer will subtract 2.34% off the subtotal from the total amount due, and that would bring your light bill down. See, on this bill, they actually deducted $83.46. So I hope that you understand foreign exchange adjustment a little bit better now. Comment below and let me know what else you want to know about your light bill. Stay tuned for more Taking Stock.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined last week, with the combined index losing less than 1%. 98 stocks traded across both the main and junior markets of the JSE for the week ending Friday, August 7, 2020. 51 advanced, 37 declined, and 10 stayed the same. Nearly 86 million shares changed hands on the Jamaican dollar market, totaling nearly $365 million. Trans-Jamaican Highway traded the most, taking up nearly 23% of market volume. The stock gained 1 cent to close last week at $1.38. Wigton Wind Farm ordinary shares traded the second highest, with people buying and selling nearly 16 million shares in the company. The stock lost 2 cents to close the week at 74 cents. And 138 Student Living Jamaica Variable Preference rounded out the week as the third most traded. Its stock gained 76 cents to start the week at $5.96. Now let's see who had the biggest gains. Community and Workers of Jamaica CCU deferred share rose nearly 59% to close last week at $3.17. Caribbean Cream up 35% to close last week at $5.37. And rounding out the biggest gains, Sterling Investments USD closed this week up nearly 33% to 3 cents USD. On the losing side now, Consolidated Bakers Jamaica fell 20% to close last week at $1.36. Sterling Investments fell 14% to end last week at $2.63 a share, and Elite Diagnostic lost nearly 14% down to $3.11. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, the Analysts, is brought to you by Ideal Portfolio Services. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by Wealth Advisor at Ideal Portfolio Services, Dwayne Taylor, and young investor at the University of the West Indies, UWI, David Rose. Hi, David. Hi, Dwayne. How are you doing?
I'm good. Always good to be here.
I'm good. Thanks for having me again.
Let's start with the giant. People always want to know what NCB is up to, one of the most liquid stocks on the market. People always buying and selling NCB. I see that their profits are in $20 billion. It's funny when you're that big, you can say 20 billion is actually a decline. David, give me your analysis of NCB.
So the 20 billion you're talking about is just the general consolidated line, because if you go to the actual net profit attributable to shareholders, the net profit for them actually went down by about $6 billion, because the way it works is that NCB only owns 62% of Guardian, so the other 30% is accounted for as a non-controlling interest. So from a shareholder perspective, NCB suffered a $6 billion decline in their net profits. However, as we take it into the context of the fact that they sold JMMB in the prior financial year, they also consolidated Guardian as well, which have influenced the results. But the quarter itself was a good recovery, considering what happened in the second quarter, where they saw a massively drop, or basically decline towards just $5 billion, which was significantly affected because of the whole FX loss and credit impairment increase. So it's a good recovery for, as you would say, the giant.
Dwayne, like David mentioned, so these results are for the 9 months ended June 30. So that would include a significant chunk of COVID. March to June
Right.
has been the brunt of the hit for us and for the world. What were the factors that influenced their performance during that period, especially during the COVID period, that quarter that we're looking at?
Right. So, as David had mentioned, and even you, there was a slight decrease in net profit. However, when we look at the financial statements, we would have seen where operating profit and other line items within the financial statements would have increased over that period of time. So this is a clear-cut indicator of the organic growth that is taking place right now at NCB. And the previous year, we would have noted that bump up in their profits due to the sale of Advantage General. But now we're actually seeing revenue being grown within the company. And this is a positive outlook for the company as well. It just shows that they can sustain themselves in the middle of a pandemic. You know, that's incredible for NCB. And with them now saying that they're looking to go overseas, entering into the Guyana's market, and also just developing this financial ecosystem in the Caribbean, we can anticipate that they have, even more plans to implement, and we can see further growth from the company. This is just the first sign of what NCB is really capable of.
David, does this include the period where they've started to close and consolidate some other locations and making some of those locations electronic only?
Yes, it would. So this is from April 1 to June 30, and NCB would have made some stock 121 roles redundant. They would have announced the closure of 2 particular branches and the gradual shift towards, as you would call, more full-service branches where you're only using a ATM device to carry out transactions. There's still a resistance to it from our culture based on the size of NCB and the customer base and the fact that persons are still struggling to transition. But this is where the rest of the world is headed. And NCB is moving with the rest of the world, because in other markets such as the US, persons might go to the bank, but probably for a transaction where they have to actually go in seriously, not necessarily for like a loan, but something really very serious. Otherwise, they just deposit their checks by taking a picture, just deposit by ATM, check on their app. So this wouldn't be a surprise. And NCB actually indicated that they've seen some increase in delinquency due to the whole COVID situation, but there hasn't been any serious uptick in realized, as you would call them, bad loans as yet. So in NCB's actual line item, they had a 2.3 billion credit impairment loss or provision for the quarter. And it's really, the credit provision loss basically is under IFRS 9, is that instead of you taking the actual realized loss when it actually occurs, you would have recognized part of it and a stage that model going across a particular time frame. So the high increased expected credit loss reflects the current reality across the financial industry and other companies in relation to the general uncertainty in terms of paying back loans. Because the reality right now is that hotels are basically operating still below 30% capacity, and NCB has, up to September 30, 13% or 12% of their loans towards tourism, $36 billion at the last check. So it's pretty interesting to see what's going on. As it relates to the insurance segment, where it actually saw that uptick in the segmented analysis, that people have to take the context that in the prior period, Guardian was an associate. Now it's a subsidiary. And they also disposed of Advantage General, which is why you've seen an uptick in the insurance operations significantly compared to last year.
Right.
And I think what NCB Financial, they have said it into context, because although all segments except for insurance had seen a decline in terms of operating profit, from a revenue standpoint, most of them actually had a general increase in revenue, which is pretty impressive. But the general expenses and other line items would have taken it down to a lower amount.
So those are some of the things that would have helped to temper some of the losses from, like you mentioned, the increase in non-performing loans and so on, even though it hasn't been that great, at least not yet. I'm sure we're going to see some more of that as we head into the subsequent quarters. So Dwayne, let's take a look at First Rock Capital Holdings. They're a newly listed company, meaning just earlier this year. They haven't even been listed a full year yet, but they're posting strong profits. Tell me about it.
Right. So in looking at their financials for the 6 months into this year, we saw that they made 1.2 million US in profits compared to their previous year, where I think it was about 5,900, if that much. So obviously that's a huge increase in profits when you're looking at performance.
You can't really compare to last year though, because they wouldn't have been fully operational yet.
Right. So when you look at the statement, you notice that they would have seen for some of the aspects of the business there wasn't anything. So right now we're looking at, yes, they have rental income, which is a positive thing. They have gains and unrealized gains on the investments that they have as well. And because of their acquisition of Dollar Financial, which operates both in Jamaica and Canada, they're also seeing some interest income, which is a positive outlook for the company. So my stance really on it would be, as a whole because, there's still room for them to grow. They have a lot of cash right now. When you look at their cash flow statements, I believe they have about 4.2 million. So with that amount of cash, they're now going to look for opportunities to build out the business. As they've said from the IPO, they want to look for opportunities in real estate, and they're also looking, well, we can say in microfinance as well. So a very positive outlook for them, but I would want to watch them, especially with COVID right now and the uncertainty of things. We want to ensure that they continue on this basis in terms of increasing the revenue that's coming in.
So they're primarily a real estate company with exposure in Jamaica. I know they have Costa Rica. I think some in Miami as well. Perhaps Cayman. I don't remember if Cayman is on the list. But David, what's the real estate space looking like right now? What are the predictions for where real estate is headed?
Well, I was recently passing through Sovereign, and I saw that a third store had actually closed. So you had 40 days, which actually closed before COVID. You had Azant, which closed like probably a couple of weeks ago. And then you had, I can't remember the store, but another location actually in Sovereign, the second floor closed. So you're seeing that kind of decline in retail space where some businesses are actually closing out. And in terms of real estate, it depends on which sector or area you're in the real estate sector. So if you're in the residential sector, especially the high-end value sector, then it's not necessarily a bad position for you because as people are still seeing right now, properties are still being sold like hotcakes. But if you're in the retail sector where you rent to retail shops, then depending on the type of business that those entities operate in, you might be seeing more empty units in the coming future based on the fact that a lot of habits have been changing and businesses couldn't necessarily survive the period of low income. So it really truly depends because you have properties like the Scotia Downtown Centre, the Panjam Building, which is Panjam, the ones where you have the corporate clients who want necessarily just hop and skip town based on the type of business that operates within them. So those are businesses that are relying on, as you would say, high value clients who are operations that cannot just be made fully digital are not necessarily in a bad position and have to necessarily worry to an extent. The major problem comes where you have to actually give in reprieve to tenants in the case where they can't necessarily afford the rental payment or you're requesting a decline or a decrease in payments based on the decline in use of space due to the government restrictions or other measures.
You know, we were talking about that recently on this program, noticing that there might be an impact on commercial real estate as some businesses transition to online. We had on Gordon Swaby from Edufocal and Monique Powell from QuickPlate, both businesses which have decided to just go virtual to give up their physical office spaces. But then on the other hand, I still see, what's the name of the new plaza that just opened on Constant Spring Road? Took a drive past there last week and I see Cafe Blue is in there next to Immaculate. It looks like they're doing well. And then I also see Super Value Supermarket and I see Progressive Grocers opening up on Barbican Road across from Burger King too. And they look like they have tenants already, well, ready when the construction is finished.
It all depends because, as I said, doesn't mean so. As I said, based on the type of business that these lessors were engaged in, you might see some of them closing business up permanently. But as I said, it depends on the type of business because some entities can't just shift entirely online, so when they're in the physical space for certain operations. So for a mail pack, that means collecting packages for persons or certain businesses and like even grocery stores and pharmacies, some things you cannot just make digital like that. As I said, some of those properties are actually opening up and expanding based on the fact that some businesses can thrive in particular areas. But as I say, it all depends on which sector or segment you're in the real estate sector. Industrial and, as you would say, high value commercial, high value commercial and, as you would say, residential isn't necessarily a big panic at the moment. You're going to see a fallout in the Airbnb sector, but those who are over leveraged and need to actually reduce their exposure or try and close out some of the losses they're experiencing due to the collapse of tourism and Airbnb market. So in that residential space related to Airbnb, you're going to see some quick payoffs, or as you would say, repo by the banks, just because persons not earning and pay back the loan. So you're going to see a fall off in that space. It's not going to be significant, instead of quantifiable data to that extent, but it's going to happen because, as I said, a person who had 3 mortgages before COVID were using the actual Airbnb income to pay the actual mortgage. So you're going to see some fall off in that area for real estate.
Dwayne, let's talk about, you want to make another point? Go ahead first before we move on.
I was just going to say, I think that's one of the reasons why First Rock has just been so strategic with the properties that they're looking to even develop. I know recently they had mentioned that they're looking to build some luxury apartments. So you get the idea that they're targeting a particular group that they do believe have the capacity to fund same. So companies like First Rock and other real estate entities have to be very strategic, or else they'll face the issue of not being able to find an pivot point regarding just the inability or just the issue of COVID and how it will impact the real estate market.
Dwayne, we're upon time, but I also want to talk about Jamaican Teas, the sister company of QWI, which hasn't had such a good fate since they listed in the latter part of last year. But how is Jamaican Teas doing?
Jamaica Teas is actually a favorite of mine. I do like the business that Mr. Mahfood and the leadership there handles. One of the things that stood out to me earlier on this year, he had made mention of them now distributing their brand of tea in 500 different Publix locations in the US. Now you can imagine how that would be them entering into a new market, bringing in potential revenue in USD. So there's a positive outlook for the stock. However, I do believe that the state that they have in QWI right now is causing an issue, especially when we look at the balance sheet and the financial statement overall, because of where it is right now. I mean, once QWI is able to, pick up, rally again, and that the stock price were to increase, we can expect that their financials will start to look better and they will look more of an attractive option. But I still, if I wasn't participating in it, I would, recommend someone to get involved. Or if it is that you have it, don't be worried about where they're at right now. It's more of a long-term stock based off of just the operations. And as I said, the major brunt of what's going on is really down to their stake in QWI, based off what I'm seeing in the financial.
And they're considering a dividend now, aren't they?
Yes, they are. So I found that very interesting. So even in the midst of all this calamity that's going on, they're opting to consider a dividend, which is definitely a plus for any stakeholders within that stock. We'll wait to see what the board decides on, if they think now is a viable time. But I think especially to build investors' confidence, they may opt to go ahead and issue the dividend. In terms of what it is, still waiting to see what that might look like once it's announced.
And David, before we go, you mentioned, you had another article on QWI recently too. Can they turn things around?
Well, the funny thing about it is JMT actually increased their stake in QWI by another 3.5 million units during the quarter. So they're taking, as you would say, more control. And the reality with QWI is that a large part of it is what you call unrealized losses. So for the overall quarter and part of the overall year, they've taken more realized losses than gains. And that's just because they decided to strategically shift up their balance sheet or their holdings, basically. So although QWI itself has been taking quote-unquote losses, these aren't necessarily, as we say, realized losses, which will be material. These are unrealized losses which has to be accounted for. So on a real cash basis, so you look at the cash flow statement, it's JMT is fine based on consolidation, and QWI is in a bad position because those realized gains and / losses are actually benefiting them in the fact that they're actually taking different stakes and adjusting the portfolio. So they actually took a top 10 stake in Mailpack during the quarter. They actually chopped their NCB holdings in half. they actually started to invest in the Trinidad market during the quarter, because they see some value in the overall Trinidad market with companies that have regional and even extend further exposure. And they made a significant gain in the US market. They even sold some of their Apple holdings and kept some of them, which are going to benefit from a stock split up for Apple at the end of the month. So as we really turn QWI around, the major problem everybody still has is the whole access purchase. If they didn't have access purchase on them, to be honest, it would be more attractive. But access holding is basically what I would see as the major thing holding the company back. They're going to have 400,000, probably $1 million dividend in a couple of weeks, based on the access dividend declared recently. But around QWI, JMT is having a fun time. The exports are up significantly because persons are more health conscious, and they've actually been expanding their product line and redesigning. The tax break just ended, so they're going to have to pay more income tax since the whole income tax break is over. But they have a good outlook. Sales are up. They have a larger distribution network. The QWI basically gives them indirect cash because of the administrative fees. So JMT as a whole has a particular advantage in the future, and with the stock split consideration still up in the air, when the EGM is held, there is potential for the price to uptick even further, along with the dividend declaration that might come in a couple of weeks.
We need to talk about that Apple stock split another time too. Big news. Thanks for joining me, David and Dwayne.
Right.
Always glad to be here.
This segment of Taking Stock, the Analysts, was brought to you by Ideal Portfolio Services. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at takingstock-ja.com and turn on those post notifications so that you can be the first to see all of my videos. The goal is to get to 50,000 subscribers. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, we're talking about paying our taxes. I've been learning a lot since becoming an entrepreneur, and there are some tricks that I want to share with you. And on Money Moves JA with Exim Bank, we're talking about intellectual property. Follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Now for this week's T-shirt giveaway. But first, congratulations to last week's winner, Onika Young. Email orders at KalilaRayMedia.com to claim your prize. And now for this week's giveaway question, and as usual, it's based on last week's episode, so you still have time to catch up. Last week, CEO of the lab, Kimala Bennett, told us that they've already secured 2 contracts in what country? Comment the answer below and you can win one of our fabulous Let's Get This Money t-shirts. The winner will be chosen at random. You have until Friday, August 14 to comment. Now tell a friend about taking stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.